the CEO of Game here. One of the things that made me interested in, connecting him with you, Wolf, here is because they were the acquirer of FaZe Group, FaZe. So FaZe, that's like an esports team, and I knew about it from before because my nephew was like into esports, and he was like telling me about FaZe. It was like this whole big thing. So when I found out the Game was the acquirer of FaZe, I said, all right, let's do this. Let's bring them on and hear more about them. So Justin, I think you can unmute yourself here.
Hey guys, how we doing? You can hear me okay?
Yep, we hear you. So awesome. Thanks for joining us. And as we said, it's going to be no softball questions here. We got a stock panel of like heavy hitting fundamental investors. So get ready for it. But if you can first just tell us a little bit about the esports total addressable market and a little bit about the FaZe acquisition and where you fit in to that market in terms of your position in the market.
Yeah, no worries. I'll give you a little bit of intro and backstory because I think it's relevant here. I was actually the CFO.
Sorry, Justin. One last thing before you get started. Any panelists are up here. We want to make this open, like a conversation. So you can raise your hand at any time if you want to chime in. You can do that anytime. Go ahead, Justin.
Thanks, guys. I was the Chief Financial Officer and Chief Investment Officer at FaZe Clan. For those who don't know, FaZe Clan is one of the largest esports organizations in the world, but also one of the largest gaming lifestyle brands. So if you have a look at their following across any of the major platforms, you'll see how large their audience and following is. I actually met the guys at FaZe around 7 or so years ago, helped them raise $60 million in debt and equity, and was CFO and Chief Investment Officer there for around 3 years. I actually left to really start and grow GameSquare, so a bit of a full circle moment for me in actually acquiring FaZe Clan. For those who don't know, FaZe went public through a SPAC, and we're actually trading at one point north of $1 billion sort of less than 18 months ago. Now, certainly not here suggesting that their fundamentals ever justified that, but the brand is really powerful and really strong. So, yeah, very excited by the acquisition. We're able to acquire FaZe earlier this year in an all-stock deal for around $14 million. It's been a lot of cleanup, and we've really, done a lot of work reinvigorating the brand, re-engaging audience, which we've really done. We've tripled audience engagement, in the last 3 months. So really excited there. We pulled out a lot of costs and feel really bullish, about where this is headed. So just to kind of give you guys a quick, sort of elevator pitch on GameSquare. The focus of GameSquare really is around, building this next generation media company, and that is focusing on connecting brand publishers, game publishers, and tier one brands with the ever-growing gaming and esports communities. And I think for those that are listening that know much about the gaming space, or if you've seen any investor decks on the space, you'll see and understand how big the audience size is, and it's growing. But one of the challenges has been that, really, unless you've been a publisher or a platform, they've really been the only ones, monetizing that audience at any real scale. So that was really the purpose of GameSquare. And today, we have 3 main segments. Our first segment being technology and SaaS. We actually have a data analytics company who has 9 of the top 10 game publishers globally as clients. We have an influencer end-to-end platform. Segment 2, we have a full-service creative agency with a media network that guarantees brands eyeballs and really helps reach this, large audience but very fragmented audience. And then thirdly is our owned and operated IP, which is we have a live experiences and events business, as well as obviously FaZe Clan, which we touched on. So it's sort of just a quick kind of brief intro overview of GameSquare today and obviously the recent acquisition of FaZe Clan.
Awesome. Sounds good. I want to dive right into the main concern and / opportunity when it comes to small cap investing is the ability to get to profitability profitability, especially in an environment of higher interest rates. Now, that'll hopefully be alleviated a little bit in the coming quarters. If you're a small cap company and you're able to flip to profitability, even in a bad macro environment, your stock will react, will perform. So I was pretty impressed. You just reported earnings last week, and the amount of costs you guys have been slashing and approaching profitability was really impressive for me for a company that's like, let's see, it's a 33 million market cap, 100 million revenue. Tell us a little bit about your drive to profitability and your thoughts on if you can do that with the cash you have on hand.
Yeah, absolutely. Look, the key for us is certainly one, getting to scale, and I think that we've shown an ability to do that. We've given sort of high level guidance of 100 million in revenue for this year. Our pro forma revenue through the first 6 months is 52 million, and if you look historically at seasonality within the brand and ad spend, certainly in the gaming space, with a number of large events and catalysts in the back half of the year, and obviously holiday season and bigger spending on merch and other opportunities, it's generally around a 60-40 split back half of the year to front half of the year. So we're obviously tracking really well and feel really comfortable about getting to that 100 million and really surpassing that in terms of 2024 revenue. So starting to get to scale, number one tick. But to your point, Ben, I think getting to profitability here is absolutely key. And we make, no qualms on that. We're very clear on having an absolute ruthless pursuit of getting to profitability. I think if you look at what we've been able to do with FaZe Clan, FaZe was burning at one point last year around $5 million a month. They had around 100 staff when we started talking to them, and today that's around 30. We understand that asset intimately. We've been able to pull out around 18 million of annualized costs. And to your point, Ben, in Q2, our adjusted EBITDA loss improved by 2.5 million to 5.4 million. We expect that sequential improvement into Q3 again, if not greater, certainly through continued cost improvement, but also through expanded margins. So we're growing revenue, but we're growing that mix of margin revenue through our owned and operated IP and our agency businesses. So, we believe that we'll, cut that. If you look at the math there, right, 5.4 million, 2.5 million in improvement in Q2. You get that again plus a little, and you see a really clear path to getting to break even / profitability, within sort of Q4. And that really is our goal, our target. It is very achievable. Cash, obviously important. Ben, you mentioned that. We had around 14 million on balance sheet, 30 June. We had, through a recent divestment, we had $4.75 million come in last week. So, we have a strong balance sheet. We've recently paid off our senior secured notes, so gotten rid of our major debtor there. And we feel like we're in really, really good shape. We've got cash, we've got runway to get to profitability, and for us now it's getting to scale, and it's really being an outlier in this space.
Yeah, that's really great. And if and when that happens, or if the market sees that's imminent, I'm sure your stock is going to be rewarded. That's the number one key inflection point to small caps really turning around their trajectory of their stock price. So really pleased to see you were able to forecast or at least target Q4 profitability. I mean, that's only a few months away. So that's awesome. Turning a little bit, when we talk about story trading, we talk about catalyst fundamentals, also sentiment. So sentiment, when I see relationships with NFL, Dallas Cowboys, this is stuff that garners a lot of attention and can help, increase the value of your company. If you can speak a little bit to those relationships, and also I just forgot, going back to what is your, in terms of competition, are you the number one, number two? Like where do you stand in terms of esports?
Yeah, great questions, Ben. So I'll hit the last one first. We certainly do have competition. I mean, the space is growing enormously. But really, if you think about those three main segments, we have competitors within each three, but from an end-to-end standpoint and really building this, one-stop shop platform, we don't. And I think that's really resonating with big brands. And obviously you mentioned the NFL there. We were recently able to win, a very exciting creator roadshow that we're rolling out this year with the NFL season actually starting in Dallas. Funnily enough, Jerry Jones, owner of the Dallas Cowboys, being our biggest investor, and I'll touch on that in a moment. And then at the Pro Bowl and the Super Bowl, and if all things go well, we'll be looking to take that to every city, in every week of the NFL season next year. Think of that really as, kind of a college game day Pat McAfee style cross into the gamer creator world with, some of the biggest personalities. Obviously, you can think of Tim the Tatman, Ninja, who are two massive creators who currently live within our ecosystem, with a clear crossover, into the traditional sport and media landscape. So really excited about that one. We're continuing to grow our partnership with the NFL. To kind of, just to also, touch quickly, Ben, on the comps, been an interesting one. We have acquired two of our comps, being Engine Gaming and FaZe Clan. We've cleaned both of them up. We've pulled out a lot of cost, and we're starting to get to scale. Enthusiast Gaming, EGLX, was a similar comp, which is kind of funny. They are probably more of a programmatic, a lower margin media business than we are. I'm not sure it's a fair comp, but they touch on the gaming industry, so people like to look at that one. But we really are the industry leader. We are looking to get to scale, and one thing I'd touch on from an M&A standpoint is we've got the right pieces. We've done the cleanup job. I think we've got a good track record there. But anything we look at on that front moving forward is going to be cash flow positive. Again, I'll go back to the point that we have a ruthless pursuit on profitability. We understand where the market is. We have a sexy story. We have the right pieces, but that's not going to resonate unless we can really generate cash flow. So that's the key there. In terms of catalysts, you touched on a couple. I think a few more to sort of add to that and really thinking about, okay, cool, well, they're improving on cost, but there's still a delta there. How do you go from, burning $5 million to getting to profitability? And that's not just on cost. That is on these catalysts. It is really on, scaling IP. It is on growing out really segment 2 and segment 3 of our businesses. So touched on our full service agency. We had some news out to market recently, where we sort of announced around $3 million of recent client wins with 5 Hour Energy, Top Golf, Dairy Max, to name a few. This is high margin revenue. We have a number of other really large deals in the pipeline that we're really confident on getting papered and announced out to market soon. These are higher margin areas of our business, so really will start to catapult that margin mix and get us closer to profitability quicker. But also, these are big 7-figure multi-year deals, so really nice capital markets deals. And then thirdly, the owned and operated IP business. This is where the NFL event exists. We recently did a really successful creator roadshow with Epic Games, which we're really proud of. There's another number of other opportunities within here on the FaZe Clan front. I know I kind of gave a bit of an intro into FaZe at the start, but FaZe from a brand perspective, extremely strong. We've been able to bring the founders back to the fore. FaZe Banks has really been leading the way with his vision around talent and content, and I kind of touched on it before, but we've tripled viewership in 3 months. We're really proud of that, and that's how we're going to start to generate real dollars on that side of things. So we're in the process of launching a new shop around merchant consumer products, which we think will be a big catalyst and driver into Q4. But we also have a number of large deals in the pipe there based off the momentum, the eyeballs in market. So there's some of the catalysts, Ben, to look for, not only in sort of driving that top line revenue, getting to and surpassing the 100 million, but importantly, as you mentioned, getting to profitability, really raising the margin mix and getting us to profitability here by end of year.
Awesome. Sounds like you got your focus in the right place. Sniper, you got a question?
Yeah, I have a question. So I'm going to start off with a comment. I want to say first thing, Justin, I see an 85% increase in revenue. Just want to say congratulations on that. That is an amazing thing to see. I have one question about one of your acquisitions, and it is Engine Gaming. And my question about Engine Gaming is, again, I understand that the esports space is huge, and especially with all the content, I know that there's a lot of ad spend on the esports space as well. But my question about this is Engine Gaming's objective to help individual creators program their concept of a game, or is the objective to program different concepts and sell these to larger game creators like Riot Games, like Epic Games, etc.?
Yeah, it's a great question. So certainly the latter, right? So we have 9 of the top 10 game publishers as clients. What we've found with the growth of this space, and to your point around, continued ad and brand spend, is that brands are wanting up-to-date data and analytics on who are the biggest creators, what games are relevant, how do I reach this specific niche target demographic, and that's what Engine Gaming helps do through Stream Hatchet, which really is the de facto market leader when it comes to data and analytics in the space. Your first part of the question is an interesting one, less on game development, but really around sort of influencer management and sort of mass deployment of influencers and creators. That's really more on the Sidekick front. So Sidekick is an end-to-end influencer platform, and it really helps there in terms of attribution, distribution, management of mass deployment of influencers, affiliate marketing, performance marketing campaigns, and so forth. So hopefully that answers your question, but again, it really does feed into that ethos of the GameSquare model, right? Which is, how do we connect game publishers and tier 1 brands with these huge and enormous growing gaming and esports communities?
That's a great answer. Thank you very much, Justin.
Awesome. Wolf, you're next. Go ahead.
I had a question. I obviously think that people look towards the FaZe stuff. I'm assuming that there's, of course, that's maybe, let's say, 5-10% of the business, and there's so much more below it, but of course that's probably what people really see publicly. I personally am in that Gen Z generation. I have followed FaZe for a while. A lot of, controversy, drama, that type of stuff comes along with it. I think like a week ago, FaZe Banks, whoever is a leader, kicked out one of the other guys from the group chats, and there's back and forth. Does that drama ever impact the business as a whole, as a larger? Is it good for business? I'm trying to fully understand.
Yeah, another good question, and certainly something that we need to manage, right? I think is probably the best way to answer that. It's a really interesting one, right? When I was looking at acquiring FaZe Clan, there's certainly a level of risk, not on the esports side. I think, the esports business is extremely buttoned up. It's more of the competitive side, and really, it's funny with Jerry being our biggest investor, but really think about the esports side as being, FaZe really are the Dallas Cowboys of the esports world. But on the FaZe media front, the lifestyle side, I mean, you're spot on, right? It's been there's been sort of controversy and things that have sort of followed it around for some time. I think we're doing a really good job of towing that line, right? And that is understanding the content that is being created that resonates with the audience and who the brand is, and allowing it to be the brand. And I think that's really important, right? My job isn't to sit here and put a muzzle on Banks or any of the big creators. It is to try and help put parameters around them. So to your point, to capture the audience, to engage the audience, and then to be able to partner with the right brands that maybe are a little bit more risk averse, that are more interested, that these are your challenger type brands that are willing to take a few more risks to really convert and reach mass eyeballs. I mean, if you look online now at all the biggest streamers, there is a little bit of controversy attached, right? And it's something that I certainly have to manage and certainly talk to investors about and the market about and take accountability and responsibility before. There's certainly a line, but, we are in the gaming business, we're in the entertainment business, we're in the content business. And look, I do think that allows you to be, maybe on the riskier side a little bit, and just making sure that you are partnering with the right brands that allows you to own the creative process and to be organic in what you're creating so that you can convert for the brands. That piece that you mentioned with Banks kicking out, one of the guys, that was a prank. It's not actually real. A lot of what's going on with the guys, they are different memes or things that are trending online. Banks is, and I don't say this lightly, a genius when it comes to the internet, to engaging audience and fan bases. So, a lot of it is tongue-in-cheek. Don't get me wrong. There is a line that we need to toe. GameSquare is a public company, and that's on me, and it's my responsibility. I don't take that lightly. So yeah, I think it's certainly a fine line, but to this point, I think we're doing a good job, right? Which is we've tripled audience, we're finding the right brands, we're really monetizing, we're cleaning up the business, and we're bridging the gap between sort of corporate and creative, and I think that's really important to be able to do that in an authentic way.
Great questions, man. We got two more here, Maj and then Shai. Go ahead, Maj.
Hey, man, thank you. Hey, man, thanks for doing this. I have a couple quick questions for you, maybe here are a few, actually. I'm looking at your goal to become profitable here, I guess, Q4, maybe break even. I guess the question, I see some potential seasonality here for this. I'm looking at the analyst estimates, and they don't necessarily jive with you staying profitable until maybe on a full year basis until 2026. They have you breaking even in the fourth quarter this year and making money in the fourth quarter next year, but then overall losing money. So when you say you're planning on getting the profitability in Q4 this year, first of all, are you saying that's like net income, or are you talking about cash flow, and can that be maintained, do you think, going forward, or is it too early for you to say that right now in terms of what you know what's going on with your business?
Great question. No, talking adjusted EBITDA, we've obviously done, a number of M&A transactions, which make it a little harder from a complete profit loss standpoint. But, we believe by year end that a lot of those pieces will have normalized, and we can get to a normalized-ish burn, right? Like, I'm sure you can imagine that acquiring a company that was trading for $1 billion for $14 million, while that sounds great, there's a real cleanup that has to be done, and there's no doubt, that's taken a lot of time and effort and stress, and it takes time to get to that normalized burn. But yeah, so talking about adjusted EBITDA, I do very much believe that that's scalable from Q4. This isn't a one-time thing. We've reached it, and then seasonality so dramatically affects our business that we fall off a cliff. I don't think that at all. I think that if you look at the fact that, again, pro forma, first half of the year, we've been able to do $50 million revenue. I think getting to that normalized cost burn is really important, and we will do so over sort of Q4, Q1. So I believe very much so that we can get to profitability and to scale from there. But look, this is a newer industry. We're proud of the growth, we're proud of the progress, but I'm not going to sit here and say that this is just, pure, easy, linear growth, right? But what I do take comfort from, and I heard you guys talking about sort of the macro effects before. I mean, I've been in a knife fight for 3.5 years, right, in micro-cap land, and certainly from an ad and brand standpoint. So we've navigated some really, really tricky markets, and I think we've done it really well in terms of, our 2023 revenue didn't quite hit where we thought it would because of some of those effects with, budgets either going away or minimizing or a bit more hand-holding and getting to yes a little slower than we would have liked. But we're actually starting to see that translating to real dollars. And what I would say is from an agency standpoint, being bucket 2 of our business, which
You guys hear him?
Yeah, I think we lost him.
Oh, here he is.
No, he's back. Probably just got a call. Go for it, Justin.
Sorry, that is an area of our business that it really is only, year 4 of the business. So what we're seeing there is agency of record opportunities, multi-year deals, multi-year 7-figure plus deals that are starting to mature. So, our 2025 view, our base of revenue that we're starting with is so much higher than it was in 2024. This is early days. We believe adjusted EBITDA, we can get to break-even profitability in Q4, but I very much believe that is a 2025 hitting, scaling, getting to net income profitability within 2025 and for a full year. So I don't have the analyst numbers in front of me. Look, I'm not surprised by that.
Right.
There's certainly some risk in that, but we feel really bullish that we can get there.
Okay, so with your cash position right now, so, I think I'm looking at you, because it's $12 or $13 million. Is that right?
So cash at 30 June was around $14 million. As I mentioned before, we had a divestment that produced another $4.75 million that came in on August 15.
Okay.
So we have ample runway to get this.
You think that cash is enough to get you to where you got to get to without having to tap capital markets, or get that visibility? I guess I'm trying to figure out, like, you have a nice pile of cash. You're cutting expenses, but at the same time, you got to obviously acquire brands or make acquisitions to grow too. And you think with the cash you got, you can do all that without risking the reward, a deep capital raise?
Yeah, we absolutely do. So, we feel that if anything, there's more cuts to be done and to get a little more efficient, rather than the opposite, right? We don't have major needs right now to be spending capital. If we were to look at doing any acquisitions, like I mentioned before, we'd be looking at doing stock deals with profitable businesses that are generating cash flow. Otherwise, we wouldn't be doing it. Our CAC is really low, right? Because we have all of these pieces in-house, right? We have talent in-house, we have data in-house, we have media in-house, we have content in-house. And so for us, the ability to scale from where we are is real. And it's more about pulling more cost out rather than a need to spend additional dollars to grow.
Okay, great. And one last question. In terms of your model, I think you say here on your website, your growth is based on acquisition of esports influencer networks, professional esports teams, adjacent assets, entities that serve in esports, gaming sports. So I'm curious on the assets that you have relationship with your owner, have relationship with. Are there contracts that kind of end with any of these entities that you have to renew every so often?
Sorry, could you just repeat the last part? I heard the first and the middle part broke up.
Yeah, as any of the revenue that you generate here, of the assets that are generating the revenue for you, are there any of them based on contracts you don't own? Relationships that could end, for example, what that looks like. I don't understand the business totally, so I just know from I interviewed Alexi years ago. That concerned me a little bit. I don't know, a little different than that.
Yeah, no, we definitely are. I think what would help is, so our sort of technology SaaS managed services business, if you think about, let's just call it 100 mil high level, right? That bucket number one, segment number one is around sort of 10 to 15 million being technology and managed services. That's really high retention, high recurring, high margin revenue. The challenge there is obviously getting to real scale, but that's nice public market revenue, revenue while you sleep, etc. Bucket number two is really our agency and media business. I think that this is probably more where you're talking, right, which is how much of this is recurring versus RFP land and needing to win to be able to grow. Pretty pleased that a large part of this is now recurring, right? Which is we are again, in year 4 of the agency business. We certainly are absolutely in the RFP process, and that's how you get wins and then scale clients. But on our programmatic side, Newsweek is our major client. They've been with us for a number of years, and it's pretty low risk in terms of moving away. It's a contract that we have. And our agency business, our aim is to convert every client that we work with into multi-year, longer-term deals and agency of record opportunities. That's starting to resonate more and more. I think of that segment 2 as being around 40 to 45 million of revenue. And then bucket 3 is our owned and operated IP, which is around sort of 35-ish million of revenue, which is really FaZe Clan on the FaZe Media side and our owned and operated IP business. That is, look, on the esports side, certainly there's some variability in terms of performance, right? Because esports, the easiest way to think of that financial model is akin to traditional sports. And prize money will be contingent on winning and so forth. I think one of the big positives there is we are FaZe Clan. We have a brand, so we aren't as reliant on having to win to generate revenue because we're able to do so through content, through our distribution channels, through merchandise, and through other verticals. So we're less reliant there. But I'd be lying if I had an exact percentage for you on recurring revenue, but can certainly get you that. It's a percentage that is increasing. We feel very good again about what our base is to start 2025.
Well, thank you.
Awesome, and we can connect you guys later if you're interested. Let's just take one more question from Shai. I got to get to Money Mark after that. It's 2:30 in the morning where he is. We want to get an update on CSSI. So Shai, go ahead.
Yeah, appreciate it. Hey, Justin. So I come from the entertainment world, and I also know a couple folks from FaZe as well. But I used to be a director of corporate strategy for Lionsgate, so I absolutely know the business of eyeballs and how tough the economics is of that business. Curious though for you, in the post-AI world, are you guys leveraging AI to kind of use that as a lever to improve the business economics of your business model, or is that kind of not? I'm curious on how you use AI right now in the business of eyeballs. Since I was in that world pre-AI, so I'm curious if that's helped you guys hold to that profitability in a couple months, or that's something you guys are using that for something else in the influencer world.
Yeah, it certainly has, and mainly in bucket number 1 at this point. We do think there's opportunities on the agency side, absolutely, but on our technology side, yes. We actually have something exciting in the works there that we're building out, and certainly something I'd say watch this space on. I can't give too many details there, but we certainly are using AI in terms of mass influencer deployment, in terms of brand logo recognition, certainly on the technology side of the business. AI is definitely a buzzword in capital markets, but has certainly helped us in terms of different features we've been able to build into our technology platforms, and something that we'll continue to monitor. We are also looking at really building out our performance marketing, affiliate marketing part of our business, and in terms of being able to really convert at mass for brands. And there's a number of AI solutions that can help us do that by obviously reducing manual work and overall headcount cost there as well. So a little bit of a watch this space, but yeah, certainly in segment 1 of our business, AI has been critical and really helped us.
Awesome. Another quick question before I pass to Money Mark, since it's late for him. Obviously, Netflix, Amazon, Apple, they're getting into live sports. I think that's going to be a precursor potentially to esports. Do you see any of their presence right now in your realm of the esports industry? If not, do you anticipate them participating more because they're investing so much? So they're in the business of eyeballs, but specifically now they're getting into sports. So I think that's going to be them doubling down as well on the esports front.
Yeah, it's a great question. We haven't in terms of pure endemic esports to this point, but I think that it's certainly a natural evolution, and you're absolutely spot on, right? you can see the trend that's happening with everything that is live, and that obviously feeds into our world with these kids that are streaming nonstop to these huge audiences, right? Like the reality is that we are bullish about esports, and there is a lot of upside there, but certainly on the live streaming side of the world, like some of these kids are, streaming to 50, 100,000 people, from their bedroom on a Tuesday night, and it's crazy and it's staggering. So yes, I think that we will see traditional media converge on this space more so, especially as it pertains to esports tournaments that are starting to generate more mainstream buzz. And I think that what's going on, I'm not sure if the listeners are aware or not, but what's going on over in the Middle East right now with the Esports World Cup is a really good example, right? It's really high production quality. It's been 8 weeks of competitive tournaments. There's a club championship between all the global esports teams. FaZe Clan's currently 6th on that. We've got our PUBG team competing tomorrow. Hopefully we get a win and we'll probably get a podium finish there. This is for $60 million of prize money. 60 million, 60. The club champion gets $7 million straight to the entity. If we would have finished third, that's $2 million straight to the top line. That's not prize money for the competitive game that you're playing in that you share with the players. That is, to the overall entity. So with these increased prize pots, with the move, from these big giants into live streaming and then move into live TV, traditional sports, I think that evolution is natural, and I think there's a huge opportunity for us to be at the forefront of that, not only from an esports perspective, but also helping navigate really the intersection of pop culture, right? Which is, I think, part of really what we're doing with this NFL program in bringing some of the biggest creators to NFL games, having them stream live to their channels and reach a new demographic for, what is obviously already a giant in the sports world being the NFL. So right now, not a huge amount in terms of endemic esports, certainly a lot more on the creative front for sure, but I think absolutely that's a natural evolution. I think we'll be really well positioned to take advantage of that.
All right, great. Justin, that was awesome. Packed in a lot of information in just 35 minutes. We'd love to see you back here with an update after next earnings release in 3 months from now. I just posted a little summary of your earnings report up top from last week. Wolf, got any closing comments before we hand it over to Mark?
Yeah, I really enjoyed this conversation here with Justin. I want to commend the speakers up here, Maj, Shai, Snipa, everybody that's on stage, really, for great questions as well. Just digging into those financials, understanding runway background with the company. I really appreciate it because that's how investors actually learn. Would love to do more of these together with you guys in the future as well. Before I turn it over to Mark, Justin, did you have any final comments on the conversation there?
No, this was awesome. Thank you so much for having me, and honestly, really great questions. So, yeah, hopefully for the listeners, it was beneficial, and keep an eye on what we're up to because I think it's the start of really exciting things, and would love to come back and join you guys at some other point.
Perfect, Justin. Have a great rest of your day or evening.
Thank you.
Thank you, guys.
Awesome.
Appreciate it.
Thank you.